Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate update for today. It is June 9th, 2022, and I'll be right back with your report. All right, and I'm back with the report. So we're going to start off with our resale homes report today. So let's take a look at our pretty little graph that Jess has put together for us. So we've got pending sales in the blue, available homes in the green, and the ones that are sold the last 30 days in the red here on the chart. And what you can see is that that green line is starting to go up a little bit. We've added about 200 homes net to the inventory in the past 6 weeks or so, where about 6 weeks ago we were at 1,300 homes. Today we're somewhere around 1,550, and that's total number of homes with resale and new homes. Here on the new home side, we're topping 700, which is good because it gives our buyers more availability. For the sellers, well, it's still not going to make a big effect to you yet because we have so much demand in the marketplace, even though the interest rates have doubled in the past 6 months. Yes, that's right. You heard me right. They've literally doubled in the past 6 months. But because we've got such limited inventory, demand still remains high, and you're probably going to still be dealing with multiple offers. Now, the one line to look at here is this red line, where 2 months ago it dropped off and it went negative, and now it flattened out here in the month of May. We're seeing that the sales are starting to decline year over year, and that's a direct reflection on those rising interest rates. That's the number one thing that we're seeing that's causing it. And then we're also seeing that inventory level creep up just a little bit. So what does this mean overall? Pending contracts down 2.3% year over year, 518 to 506. Not a huge difference when it comes down to the real numbers, but it's a decline nonetheless. Sales are up about 1%. That's almost deceptive, but it's just there, and we're starting to see it go down just a little bit when we're looking week over week. Months of inventory, pretty much the same year over year, 1.16. We do expect that that's going to creep up a little bit as we get into the rest of the summer months. Price per square foot, 17.9% increase. A year ago, we were at 115 and change. Today, that we're at 136.44. Now, comparatively, I saw a report yesterday that said that places like Dallas are at $250 a square foot. Austin is creeping up to $300 a square foot. So folks, we are a bargain when you're looking at $136 a square foot when you're looking on a national basis. And with so many people doing the work from home routine, this is a great place to be here in El Paso, Texas, where we're at $136.44 a square foot on average. Days on market continue to go down. We're at 32 days on market on average, compared to 39 days on market a year ago. So overall, a really good report. What we're seeing is that the sales will probably continue to dive a little bit, but because of the low inventory, we're going to see the prices continue to rise because of the demand that's out there. Now, on to our new homes report. Pretty little graphs. These are looking real good. Again, look at this, the available numbers. We've got that downward trend there that we've been looking at for the last 18 months, and it's starting to creep up just a little bit. It's just got a little bit of a touch downward, but when you look week to week, it's starting to look up just a little here. On the red line, the sales, they ticked up just slightly over the last month here in May. What's it look like? Pending contracts down 26.8%. That's because of availability. There's just not a whole lot of homes that are available for immediate move-in or 30 days or 60 days. We are still seeing, we are seeing the builders are starting to get some model homes back out there, and we've even seen some incentives from builders. This is a surprise. In the last 30 days, we've seen commissions on some houses go up. We've seen some incentives go out there, so the builder market is starting to catch up to where it was a couple of years ago. Sales are up 15.5% year over year, 187 to 216. Months of inventory, 1.2%. That's a little bit of an increase. It went from 331 to 335. Price per square foot, 126 to 153. So even with the new homes, we're still well below the other major markets here in Texas. Again, we're looking at $250 to $300 a square foot in the Dallas market, the Austin market. San Antonio's running high, and Houston is running high as well. Houston's taken a little bit of a hit because of the energy sector, but that's really the only thing that's making the difference over there. As soon as the energy sector changes, that market is on fire, but El Paso is the place to be because you can buy more home for your money comparatively to the other major markets here in Texas. Days on market, 165 compared to 146 last year. That again has to do with the supply chain. We just can't get the supplies to get the homes finished. That's continuing to be a problem, and it's going to continue to be that way until we can get the borders open. We can get the just-in-case inventory online with our manufacturers of doors and windows and paint and appliances and things like that. They've been working on the just-in-time inventory method for a long, long time, and now they're starting to switch to keeping some backstocked so that they're working on a just-in-case we run out is kind of the theory on that. So, good report. 3 key takeaways here. Number 1, unit sales of resale homes has leveled off and appears to be in decline compared year over year. Prices continue to rise because of the lack of inventory, but hear me, it's still a great place to be because compared to the other major markets, Dallas, Austin, Houston, San Antonio, and, what's the other one? Dallas, Austin, Houston, San Antonio, Lubbock, us. We're there where you can get a bargain here comparatively in a home price. And number 3, interest rates continue to rise, which reduces that buying power for the buyer out there in the marketplace. Literally, they have doubled in 6 months. Back in December, you could have gotten a loan for roughly 3%, and today you're looking at 6%. That's my report. So if you've got questions on this, please give me a call. Let me know how I can help you out. My cell number, 915-588-1850. You can text me on that same number. You can shoot me an email, patrick.tuttle@coldwellbanker.com. Yes, that's a new email address, patrick.tuttle@coldwellbanker.com, and I'll be happy to answer your questions on how these numbers affect you and your marketing of your home or buying a home or anything else that we can help you out with here at Coldwell Banker and Legacy Management Services. Thanks for watching. God bless you. Make it a great day. Bye-bye.